Good morning, traders. This is Michael coming to you from Game Edge on Wednesday, August 27th with our pre-market prep and Q&A session. As always, here at Game Edge, we'll cover our three pillars: sentiment, structure, and trend, as well as individual equities. And then we'll take some questions from people joining us online, as well as going over our web app for individual equities. And I also want to cover PLTR that I posted this morning, a swing trade that we took. So we'll review that also. So hopefully we'll run through this pretty quickly, and then we'll get to the Q&A session also. As always, join us at gameedge.us. Put in your email here in the newsletter section. You'll be provided with our weekend newsletter. Tons of educational content about our thesis, our tools, how we navigate the options, SPX option structure, and how we use that to our advantage, and how we identify areas that we can look for trading plans intraday, as well as swing trading also. Check out our free courses here. The Game Edge Fast Pass is our flagship educations course. Again, covers everything about Game Edge, as well as SPX option structure, Gamma Delta, and the tools we use and methodology. And then also the School of Options. This is great for new options traders. This is a bachelor's, master's type course with education, as well as quizzes at the end to check out how much you've learned, and then the mental side of trading free course also. And then, as always, join us here in our Discord, 14-day free trial, all the tools turned on, extensive supportive community, as well as our Game Edge team that comes alongside of you, helps you navigate the SPX option structure with a intensive, extensive, in-depth SPX game plan for the day, and how you can set your trades up, as well as a great community of traders with varying experiences and backgrounds, all the way from former market makers and large money managers to new traders that are just getting into the options trading, as well as single stock trading market also. So as always, come join us. We'd be happy to help you. And we do provide individual education sessions also, if those are needed. All right, let's jump into the trend portion of our three pillars. As always, we start with our market trend model that is based on the tick index. To get you orientated, the bolded CT is our intraday instantaneous CT. This is what you want to look at if you're a zero DTE trader. We saw some weakness come in the past few days, and then we saw some consolidation and sideways action yesterday. These shorter term moving averages, what we call the railroad tracks. This is our momentum kind of indication. If we're above those, we want to be long the market. If we're below those, we want to be cautious. And if we're in or down sloping, we want to most likely be short. And then this colored ribbon is our longer look back period. Obviously want to be, the red needs to be of the above the cyan, indicating that buyers are in control on a longer period. And you want to see the bolded CT, as well as our what we call our railroad tracks or moving averages above those, indicating buyers are in control of the overall market. So yesterday, again, we saw some consolidation, and then the end of day, we saw that quick move to the upside towards the really latter 15 to 20 minutes. So we'll see how we open today. We'll see if this bolded CT starts turning back to the upside in a positive slope, lower left to upper right, indicating buyers are taking back control of the overall market. You'll notice up here, breadth indicator, new highs versus new lows, fairly flat yesterday. New highs obviously outpacing new lows, so more stocks were being bought than sold. Our filtered cumulative tick, this is plus 1,000, minus 1,000, larger institutional orders, as well as market participants, was fairly flat yesterday. So institutions were pretty much stagnant, not much participation. And then our overall cumulative tick was basically flat, negative 5,000, but within the kind of noise floor, just under the zero line. This is obviously our noisier tick. It includes all the regional exchanges, as well as everything else. So we'll move on to our quality tick that we base our P-Trans to PGX portfolio off of. This is what we call the tick RC. Again, a little bit more qualitative tick. This is pay for play exchanges. So again, we saw that turn up just at the end of the day on the first shorter term moving average. We want to see this continue to complete to the upside and emerge out of these railroad tracks or shorter term moving averages, indicating more stocks are being bought than sold. So again, as we come into this colored ribbon, as we've discussed multiple times before, this can be a turning point where we will bounce back to the upside, or we'll start seeing more negative selling in the overall market, and we'll start emerging through the colored ribbon and possibly to the downside. So we're still in that overall turning point. We'll continue to monitor this intraday as well as day over day, and see if this is going to be a bounce back to the upside, or we continue along the consolidation, or do we start a little bit larger pullback with more selling versus buying. Obviously, NVIDIA earnings today, so we'll watch that post-market also. All right, heading the SPXA, this is our cruise ship. Again, noting over here via our purple tiles and our web app, these contracts are monthly and don't turn over as rapidly, so larger institutional market participant players within this SPX option structure. And we look at the SPX option structure because it's the largest, most notional value. It gives us a 40,000 foot view of how market participants are positioned, not necessarily on a intraday or weekly time frame, but as a monthly time frame. So again, larger cruise ships turning the overall market or supporting the overall market. So again, if this structure continues to be green, net delta above and below spot price, call dominated. Again, we would look for supportive type action on any pullback unless this starts to really fall apart or degrade above or below spot price. As of now, 6,500 looks like that key target to the upside. And then you also know PGEX has moved up to 6,600 via the SPXA. So again, call speculators are still speculating higher within this overall structure on out in time post September OPEX. And then transition really has not changed much day over day or week. So again, staying above this transition will continue to be supportive. You see where spot price was at the close yesterday. All right, moving on to the SPXP. Obviously, we separate the SPXA and the SPXP. As you'll notice over here, these contracts are shorter duration, 0 DT as well as weekly expiries. That gives us obviously the speedboats, which is the SPXP. These exert a little bit more force daily as well as weekly, so that's why we like to look at these. Call dominated above and below spot price. Quick annotation down here, 51% of the SPX rotates this week, even with Tuesday's expiry. So where this money gets deployed after expiry will be important to plot our course on out in time. So we have the SPXA that's plotting our longer term course for our monthly and quarterly. And then we have the SPXP that's plotting our daily to weekly course. So again, we like to see a convergence, both of those, and really pointing in the same direction. So we have confidence in the overall market and structure. Call dominated, as I said, transition below spot price now. Again, staying above transition. Spot price needs to stay above transition to remain bullish. If we're below transition, we'd be a little bit more cautionary. Again, 6,500 JPM at end of the month, end of the quarter short strike, starting to most likely exert its force. So we'll continue to watch that. You see PGEX and COI up there, highest call open interest, as well as the local peak of call speculation also. So again, we'll continue to watch that 6,500 to the upside. That is just the most likely target that we would head towards, and then see some overall reaction and stalling into that area, unless we see a large amount of speculation above that, and then the overall structure continues to advance to the upside. And again, transition located there just below us, so again, continues to be supportive. And then 6,400, large level that we'd anticipate to be a large or a supportive type level bounce, as long as we're staying above those levels. All right, let's move on to the delta balance. We've been discussing this extensively really on the pullback and then heading on out in time. Delta balance pegged at +1, indicating call speculators are maintaining overall control. You'll notice that we did see the right-hand plane, so green dotted line. Let's get it orientated here. Right-hand plane is above spot price structure. That indicates out of the money calls as well as in the money puts. And then the left-hand plane is in the money calls below spot price with the red dotted line, as well as out of the money put speculation. So you did see the left-hand plane drop slightly, the right-hand plane increase, indicating out of the money call speculation, but delta balance being maintained at 1 and both planes above 0. We give the edge to the bulls and the call speculators maintaining overall control. And again, this can just bounce back and forth, but that key level is 0, and we're not seeing a significant divergence as spot price moves higher. Projection on out in time, again, delta balance staying pegged at 1. And then what's nice about our interactive charts here at GameEdge, you can scroll over and see the expiries. Obviously, this is September 2nd, so that's post-Labor Day weekend, long weekend, as well as shortened week next week. So you see the delta balance start to drop slightly, but you see the right-hand plane increasing, so out of the money call speculation being maintained. You see the left-hand plane dropping slightly, obviously indicating in the money calls could be eroding or expiring. Really not a significant amount of out of the money put speculation, really just dropping back towards that 0. So nothing really to be cautionary about. as long as this is maintained above zero, and as long as spot price continues to move up and delta balance is maintained. Moving on to the GEX ratio, obviously this is what we want to look for short dated call gamma going in versus short dated put gamma. This is put call ratio based, but we just add a gamma component, again indicating short dated speculation within the overall structure. We continue to see this rise in a positive slope as spot price continues to move to the upside, again, which continues to be supportive, maintained really above that 1.5. So again, just continuing that positive short dated call speculation going into the overall complex. Nothing really to write home about here. What we'd be looking for is if spot price is up and GEX ratio is down, indicating that the short dated out of the money call speculation is starting to wane and dry up a little bit. So that's that out of the money speculation to the upside. So that would most likely prohibit a significant advance in price. But again, staying above 1, we give the edge to the call speculators as well as the bulls, as long as we're maintaining that level. So historically, you can just look back. Again, we talked about those extreme areas where we had a possible bounce that was brewing within the overall structure once you reach these extremes. So again, we'll continue to keep an eye on that. And I posted, I think the other day, that local high of 2.3. Again, we kind of reached up here. 2.3 to 2.5 is an area where we can see an overall pullback within the overall put call ratio, or sorry, GEX ratio. But again, we saw a spot price being maintained, so really nothing to write home about there. All right, let's move on to the 0 DTE structure, SPXP. Orientated drunken sailor range. This is our orange box. We were within that overall drunken sailor range yesterday. It was very choppy. We posted on X multiple times about our intraday volumetrics. If we're within the drunken sailor range, we're really at the mercy of market participants opening and closing individual contracts, and we want to see where that volume is being transacted and the direction that it's also being transacted. So if it's being transacted higher, obviously there are call centroids with our vol-m. If they were moving higher, that indicates market speculation above spot price and contracts opening. So the indication would be that we'd most likely move higher. And then if the put centroid is moving down, massive volume of puts are being transacted below drunken sailor range or where spot price is at, that would be speculation to the downside. Obviously, as the speculation increases in that direction, usually spot price will follow. So that's why we monitor those intraday. Yesterday, the centroids were crossing for about 90% of the day. So again, that's choppy consolidation range, difficult for directional trades and directional traders. Spreads and other options structures are much more advantageous on a consolidation day. That's why when we identify that early on in the day, we obviously encourage our members to not be directionally structured, to be structured to take advantage of where spot price may not go, and just stuck within this overall drunken sailor range. So today we have a larger drunken sailor range, which I posted this morning. Again, lower exposure areas, so we'll continue to watch that. It looks like we're going to open right in the middle of that and possibly right above transition. So above transition will continue to be supportive. Within transition, extreme choppiness, as you see the net OI here, very low. So we'll be driven by those market participants opening and closing those contracts. Below 64.40, we'd look for a little bit more weakness, possibly down towards 64.25, 64.20. Not really thinking that we're going to go significantly below 64.40, at least at the open. So we'll continue to watch that. That's in GEX. That's a local peak there that we most likely could see some monetization at the bottom of the transition as well as the drunken sailor range. Now, if we see a significant amount of out of the money put speculation starting to come in via our intraday volumetrics, then we'd look to be short below the drunken sailor range. And then obviously we'd be long above the drunken sailor range. 6,500 is that first kind of stopping area that we'd look at, that local peak gradient you see there, the call OI. And then we'd have to monitor the volume on the call speculator to see if we have enough volume to get pushed through this local area of 6,500. And then we'd look for 6,520, which is that next gradient, and that matches COTMC. That's where the largest mass of, or largest participants out of the money calls become in the money. And historically, we can see some monetization there. Obviously, you see COI up here at 6,580. Those speculators probably not going to be happy today because not really anticipating us to drive up that high. So that is the overall trading plan and structure for today. Look at the SPX P net stack command. Again, highest sensitivity levels. Make sure you mark these on your chart. 64.85. We are out of the money call, in the money call dominated, as I've already discussed within the SPX structure. So 64.50 would be that first pullback level that we'd anticipate to be supportive. That also matches transition area. Charm, overhead, out of the money calls. These are going to be an overhead weight at 65.20. Again, you look at the right hand plane integral. Those will continue to grow as long as we're below that strike. And then out of the money puts below us, 64.50 obviously matches the delta. Again, out of the money puts, those will continue to be supportive as long as we're above that level. And you see our gamma levels as well as our Vanna levels. If we do see volatility drop, have an opportunity obviously to overtake that 6,500 level and then head up towards 65.20 into the downside 64.50. You see those integrals there. So we'll continue to monitor that intraday. Sorry, let's head over to our trading view chart. So this is the SPX P spread X. This is obviously the projected open. I went ahead and put our drunken sailor range as well as our 0DT transition levels on that, so we can get an idea where we're at. Just pulling back to the overall transition area, P trans 64.60. This script is automated for our members, so you can download that, copy and paste into TradingView as well as Thinkorswim. So pull back to transition, obviously still would be bullish within the overall transition. You're still bullish, but a little bit more cautionary and choppy. So down towards 64.45, we'll continue to watch that. And you see 0 GEX on the full script and COTMP. We would most likely anticipate this to be a bounce level, and now obviously the 0DT levels also. So we love to see a confluence of the full script, all expiries, as well as 0DT. So that gives us a greater confidence of our trading plans for the day, intraday. Sorry about that. So again, pull back to transition. That would be a key level to get involved. As long as we're staying above transition, obviously we wait for the opening range to clear. The market on open orders and books, we usually wait 15 to 30 minutes, and then we start getting our intraday volume metrics to really start setting our course and plotting our trades for the day. So drunken sailor range up there, and then you see prior day high. I like to mark those nice TA levels. Again, when we see a confluence of price action as well as a key level, again, gives us greater confidence if you're a TA trader. Our gamma and delta levels, as well as sentiment structure, overlay very well with most trading plans that people use. So let's move on to single stocks really quickly. A few stocks I was watching this morning. So Apple, this is meeting that local peak of call speculation at plus GEX. So our P-Trans to plus GEX portfolio is based on overall entries at P-Trans as well as profit taking at PGEX. So you can see nice trade from 225 to 230 if you were just using P-Trans to PGEX. This wasn't executed in our mechanical portfolio because of the overall MTM. But intraday, this is the same structure and sentiment, and trade plan we look for. Pull back to P-Trans gives us a great opportunity to get involved on a trade with a nice risk reward. Stop could be 0 GEX and N-Trans, or depending on where your risk management is, below P-Trans, obviously these levels, so you have price discovery around, so these are areas. But again, getting involved on stocks that have a supportive type structure and sentiment, and then move up towards 230. So 230 is going to be that local level peak that we watch to get over today for Apple. If we get over that, obviously opportunity to move much higher, but this may be that hurdle for Apple for today. And then all the stocks we go through pulling back to P-Trans levels. We were really extended above transitions as well as GEX levels, PLTR, Tesla above that plus GEX level. So would not be out of the realm of possibilities to pull back to plus GEX today, or even within the overall transition from P-Trans to plus GEX. And that would still be a bullish look for many of these stocks. You see NVIDIA almost reaching up there to plus GEX, again, that local peak of call speculation and possible profit taking area. PLTR, I posted this one this morning, that swing trade. Obviously, this is an area that we just look for a possible bounce into that NGEX level. We don't necessarily base trades on this. We base trades on 0 to P-Trans as well as P-Trans to plus GEX. Obviously, we're pre-market already gapping up towards that plus GEX level. But looking at our web app as well as a few of our scans, which includes the Gamma Up scan, that Gamma Up scan basically tells us if the overall structure is advancing and the short dated call gamma is advancing. So that gives us an opportunity to look at those stocks. So pull back to 150, obviously TA, you can look on X. Most people were watching this 150 level, but they really didn't know an idea other than price action. Why were they watching it? Obviously they were watching it because of an option structure underlaid from a supportive type standpoint, overlaid with the technical analysis. So understanding how the option structure looks, as well as if you're doing a TA, a technical analysis, gives you a greater confidence that this can be supportive. Again, negative X local put peak that many times you can see monetization. Obviously below this negative GEX, you enter a little bit more negative gamma put dominated environment, and it would be much weaker for the stock. So we watch for these pullbacks towards these key levels to see if we get a reaction and a bounce. Obviously significant reaction off of that negative GEX level. So if there were short-term put speculators, most likely this is monetization. You drive up towards the zero GEX level and in trans level, and then once you start transitioning across that zero GEX level, you're entering a little bit more favorable environment, a little bit more positive gamma call dominated. This is basically a balance point, zero GEX. Then you cross that zero GEX level, again, a little bit more positive overall environment. So if you get involved in the zero GEX level as you're transitioning in the overall structure, again, this is an early entry point. And then you have P trans. This would have been a nice trade here, 155 to P trans. And then we saw the pullback yesterday right to zero GEX, that balance point, opportunity to get involved again at that point and manage your risk appropriately, and then a bounce up across P trans, and then you just see how this accelerates as we cross that positive transition point and really start entering that full call speculation, positive gamma call dominated structure, and then it's just a quick move to the upside. So this is the areas we really want to capture, zero GEX to P trans. If you're an early entry person, then again, negative GEX is an early entry point. Local put speculation peak that we can see some monetization. So just another area to watch, depending on how you want to structure your trades and really how much risk you want to take. But we educate our members that really waiting till we cross above this zero GEX level and start entering a more favorable environment is the higher risk reward trade. But again, if you're a little bit more speculative, you can get involved here with proper risk management and proper position sizing. So moving on, obviously the other stocks we're looking at, BABA, PLTR, Uber, Robinhood, really just across the board this morning. This morning we're going to be closing a couple stocks in our P-Trans to PGEX portfolio with nice gains. BAC, Visa, are a couple stocks will be closing this morning. So you can see we're really just pulling back on the SPX to transition level. Really not that bearish at the moment. Really, as long as we're staying above transition, we'd lean a little bit more bullish. But within the overall drunken sailor range, we can be at the mercy of the intraday volume metrics. And obviously with NVIDIA EPS post-market, really we may just be chopping back and forth within the overall transition as well as the drunken sailor range. So a little bit longer today. I wanted to cover some single stocks. I wanted to cover some philosophy on our swing trading and the SPX game plan. Let me know if you have any questions. I'll hang around for a couple more minutes. We're about 6 minutes to the open. Appreciate everybody joining us. Thank you for staying with us. Obviously a little bit, as I said, longer today. We'll try to do a midday review. We've been trying to do that the past week as well as this week. Let us know what you want covered on that midday review. Give us some feedback. Post on X and respond to us as well as YouTube. And then as always, we do the post-market recap where basically we rehash our pre-market plan to look at if we were correct in understanding the SPX option structure, and then how we navigated the day with our tools and our overall methodology for the day. So again, thanks everybody for joining us. Let me know if you need anything. Thanks, Mr. Hedge Fund. I really appreciate it. Yeah, I think the more we continue to do this and the more people join us and really see our content and really get a great understanding of how basically the tail is wagging the dog. We see the zero DT structure continue to explode. Even if you're not a zero DT trader, we do swing trading. We have a mechanical portfolio that we post about that outperforms SPY and SPX buy and hold. I posted my year-to-date gains for our members with our P-Trans to PX portfolio this morning that we went over. We're beating the SPY and SPX pretty handily. But the key thing is we had a very small drawdown in March and April within our overall portfolio. So that is what we really try to focus on. Also, we have a 70% win rate in the P2P portfolio, which is great. But it's about that, fear factor or the heat that you're going to take on the portfolio. And if we can limit those drawdowns, then when we start moving to the upside and we're able to get involved, that really accelerates your gains. Because if you had a 15 or 20% drawdown and then you get involved on the bounce to the upside, basically you're just trying to recapture all of those losses. But if we can limit those losses to the downside via our market trend model, as well as our structure and sentiment mechanically, then that really is where we want to be at. And then obviously you're just compounding those gains when you can limit that downside and have that floor really continue to move up, and then systematically you want that P&L curve just to march higher once the market starts indicating that you can move back in. So, all right, thanks everybody. Again, sorry, long one today. I wanted to cover a lot of content, but like and subscribe on X as well as YouTube. Join us, gamedge.us. Come in the Discord. Again, 14-day free trial. Happy to get you up to speed as quickly as we can. Again, extensive education that our whole team has put a lot of time in to accelerate the learning curve for our tools, as well as understanding SPX option structure as well as individual option structures. All of our teaching is fractal in nature. It crosses all areas of the market, whether it's individual equities or ETFs or the SPX, or even the ES, using the SPX to trade the ES. So, all right, everybody, make it a great day, and we'll see you later. Thanks.